Hello and welcome to my channel once again. I'll start by saying a big thank you to those of you that are supporting my channel by subscribing and by watching my videos. Sam K, shout out to you. You were my fifth subscriber. It's still very early days here, but thank you very much. I appreciate the support. So this video again is about the fintech industry. The fintech industry is growing very quickly. And the BNPL, the buy now pay later subsector of that industry in particular, has been seeing a lot of interest. So today I'll be talking about the Limepay initial public offering. So basically, it's in the news that Limepay is actually preparing for their initial public offering. They're in the pre-IPO stage, and they've recently raised $21 million for this purpose. The implication of this is that their IPO is imminent. So because of that, I decided to do a two-part video. The first part of the video would discuss how you can subscribe for the IPO through your broker. And also I will talk a little bit about the Limepay business model. And then the second part of the part two of the video would really focus on what you should look for before you actually get into an IPO. Obviously, you don't want to lose money. The main purpose of this channel is to help new investors or even the whole people that have a little bit of experience in investing, to make more money and to actually optimize the way they invest. So what should you look for before you participate in an IPO? So what are the risk involved, and what are the potentials involved as well? So two-part video. First part we'll talk about the how you can subscribe to the IPO through your broker, the Limepay IPO in particular. The second part, the other thing I'll talk about in the first part of the video is the Limepay business model, and the second part of the video will just simply focus on things to look for before you participate in an IPO. So let's just jump into it right now. So how do you subscribe? So subscription would really depend on the broker that you deal with. For me, I do my trading through ComSec, and I'll show you how you can subscribe to be notified for the IPO through ComSec. So the first step when you want to subscribe, if you use ComSec as your broker, you first of all log into your account. I'm already logged in, and then you click portfolio. I've just done that. And then that takes you to, so once you click portfolio, that basically takes you to some details on your portfolio, and then you go from there, you click on offers and apply. It's just loading up, and then that takes you to where you can subscribe. So once you've clicked offers and apply, you then scroll down. You scroll down basically to the IPO and new issues notification, and then you subscribe. So what this basically does is, with ComSec, every now and then they get offered, some amount of IPO stocks, and depending on the volume that they get, that gets allocated to them, they might be able to inform you about an IPO that's coming up, that's pending. And then basically, usually there is a minimum purchase that is stipulated, and then you can pretty much buy participate in an IPO, through your broker. So this would usually vary, depending on the broker you use. I'm more familiar with ComSec because that's the one I use. You might just want to find out with your broker how it all works. So guys, that's it about subscribing for IPOs and getting ready for the Limepay IPO. It's pretty exciting. I'm really looking forward to that. Hopefully it's not oversubscribed, and ComSec can really offer some of this to me, as I would like to really get into the Limepay offer very early. So, and that takes me to the next sub part of this video. So what does the Limepay model looks like? The Limepay business model sort of differentiates itself from the other BNPL model in that they tend to focus on the merchant. So basically, the whole entire transaction happens on the merchant gateway. So for example, let's say you're buying something from Big W, all of the transaction process would happen on the Big W website. You don't get redirected like the other models, the other BNPL platforms like ZipPay and Afterpay. You basically do your checkout on Big W, and as you're trying to do the checkout, you're gonna see a toggle button that offers you to pay in 4 installments, for example. And then it all looks like it's Big W that's offering you that package, but it's all sort of powered by the Limepay platform or engine. So basically, what we have now through ZipPay or Afterpay is something like this. You go on whatever website you want to shop from. Let's say you want to buy electronics from JBI5, for example, or Avinoman. You go onto the website. They basically offer you that this store uses ZipPay. So if you want to pay through ZipPay, you basically click on that, and then it redirects you to ZipPay or Afterpay platform. Obviously, I'm sure a lot of people are familiar with this. And then subsequently, Afterpay will collect their payment in 4 installments. If you miss any of the payment, you pay a fee, and that's how Afterpay makes their money. The Afterpay also and ZipPay also charges the merchant some fees. And obviously, ZipPay is a monthly payment, and they have the Zip Money as well, which is more like a credit line that they offer you. So, but obviously, you tend to get redirected from their platform, which is a problem. What Limepay is saying is that during the process of redirection, a lot of these merchants might actually lose their customers, and then they don't acquire the consumer behavior data by being redirected from the platform. The other alternative is that you go to like a pseudo marketplace that ZipPay and Afterpay has. It's more like their website, and both of these actually they're not a full-on marketplace. They're just basically where the different merchants that they work with are listed. So you click on anyone you want, and then it still redirects you to the merchant store. And then the third step is you get chased down for repayment through ZipPay. So all of this is a lot more complicated than what the Limepay model looks like. Limepay model looks more straightforward. The merchant customizes their web store as they wish. All you see is a toggle button, offering you instrumental payment, and that's all powered by Limepay. It's very subtle. You probably wouldn't even know that Limepay is involved until you get text message from them, for the repayment. And so how do they make money? Limepay basically makes money by they charge $5 repayment fee if late repayment fee if you're late in repaying your fees, and secondly, they also have a small merchant fees that they charge the merchants. And they are actually saying this model is better, and I do believe that it's a better model because they can manage the data in a much more smarter way for the merchant. The merchant gets a lot more behavioral insights into the customers, which is data is very, very valuable in e-commerce. This is where they would excel. And in addition to that, they also would tend to offer a better experience to customers because you're not being redirected all over the place, and you can your transaction is a little bit quicker. So in terms of their performance so far, it looks like they have actually gained a lot of merchants. They're dealing with Woolworths currently. They're dealing with Puma and EB Games. So these are really big names. These are really companies that are pushing into the e-commerce. A lot. They're trying to transition from the traditional brick and mortar approach into really selling online. So it looks like they're really going in good direction. It looks like their model is attractive if these big names are actually on board already. In terms of what their growth looks like, obviously it's still a private company. We don't have a full access to their reportings, but currently their chief revenue officer says, or chief finance officer says, said they have actually witnessed 250% quarter-on-quarter growth. In addition to this, they're actually doing about $95 million on a seven-day ARR basis. So it looks like they're really turning in a lot of revenue, and it looks like they really have a good future. They might really be a good competitor for the existing one out there. So I'm really keen on the IPO, and hopefully we can get our hands on some of their shares before they get fully listed. And if that doesn't happen, obviously we still got our chance. On the day one of their listing, I look forward to being able to purchase their shares and being one of their shareholders and join the ride quite earlier on. So maybe we're gonna have good magical returns like we've seen with Afterpay. Who knows? We just have to give this a shot. And definitely one important thing to do is to keep a very close eye on their reporting, and make sure we're really looking at what the future holds for the company, and make a very meaningful decision based on that in terms of our our investment. So obviously we still all have to do our own research. If you're watching this video, this is not a financial advice, as I've always said. It's just sort of some form of education. You still do have to make your own decision. Thanks a lot for watching. I look forward to doing the part 2 of the video. On the part 2 of the video, I'll be talking about everything, what you should be looking out for in a company before you buy their IPO, before you buy into their IPO. And I'll see you on the other hand and watching my other video. And if you haven't clicked the subscribe button yet, please do so right now. Thank you very much for your support once again. Thank you.